After Iran has signaled, if you want to believe it, as we just talked about, that it wants to end the conflict with Israel. Our next guest is still staying bullish, though, because on oil, because economic growth, he says, is going to be the real driver here. Cole Smead is on set with me. He's the CEO and portfolio manager at Smead Capital Management. Welcome.
Good to see you.
I mean, so many cross currents. It feels a little bit scary to do anything especially if you're a tourist, and you're not. You are a longtime student of this space.
Yeah.
So where do you see the most, for lack of a better word, opportunity right now?
Yeah, so it's been everywhere in about 2 or 3 futures trading sessions. Watching it open at 75 yesterday, in the evening, and then seeing it, down as much as I think $3. Now it's $1. Here's what I like about the space in general. No one has an edge. If someone says, like, who knows what's going to go on with this? No one does. Congratulations. That's great for low IQ people like me and Dad, and we're going to be fine in this. But here's really the setup. If you go back and look at these stocks, their low was not the low of energy prices. It was the height of economic fears the 3 days that followed Liberation Day.
Early April.
Correct. And so what I don't think people understand is this is a proxy of economic growth. If someone says, what do we use oil for and what do we use this carbon-based stuff for? It's really for economic growth, productivity, incomes rising, things like that. And so that is the primary thing that could hurt the oil business. If you were going to play real conspiracy theorist, and I mentioned this right before I walked in,
sure.
Why was OPEC out of nowhere creating these production increases? Well, you would have thought then they wanted to gain market share. If I sit back today and watch what's going on in the Middle East, I would say because the Abraham Accords were called off with Israel and Saudi Arabia being main players in that, this was planned. This attack was planned. It's why the international community is so frustrated with it probably, is because they weren't in those dialogues and they didn't know. I think if that's true, if that theory is true, the Trump administration has been very tight-lipped about this, but it would make sense why OPEC was adding production, because they knew that there could be a potential supply issue that they might need to meet with a move up in prices.
Which should make you bearish on crude, all things considered. Well, that was pretty well organized. I mean, and so if the proxy is economic growth, which is looking better lately, although we'll see what happens when the next tariff deadline's up and so forth, and maybe copper is another way to check on that. It's been behaving better. Then I guess you also have the tactical opportunity. Like, you were watching the Canadian producers when we had some of this back and forth between the U.S. and Canada. I don't even know where that ended up settling out. So how have some of these names that have been caught up in all of this performed, and which ones do you think are the best bets?
Yeah, so 2 things I would say. One is that most of the investors, to your point, that came into the space, they came in 2 years ago, they're long gone. It's 3% of the S&P 500, okay? So we really look at this as the value and the opportunity we have here is just so much different than the S&P 500 overall. I look at this as like we're somewhere between March and August of 2000, where we retested the high almost back then, and then we were in a bear market. Okay,
so you concede that it looks like a bear market, because most people
this is a bear market
away.
rally. We think it's a bear market rally. And to add to that, here's what's interesting. If you go kind of along this curve, it's like, okay, well, no one had any good expectations on these business. They were bearish as all hell. All the professionals, oil's going to do terrible. OPEC's going to ruin this market, etc. Now we sit at a 30% higher price. Even this is like moving all around. It's down $1. I mean, it was down like $3 earlier. So again, I think most people have a very bearish view of the economy, and they think that stocks are just going to do fine. When we're spending 7% of our GDP in deficit, can we get a recession? I feel like Wall Street's in this game of recession hunting. They're trying to find this animal called a recession.
Right.
And yet for years now, we just can't seem to find one.
No, I agree.
The fiscal largesse is so large, it's tough to cause recessionary forces, because we normally do that to come out of recession.